Welcome, YouTubers and our clients at InStar Alliance. Again, we're here in the Washington, D.C. area, covering primarily Northern Virginia. We also have other investments down in the state of Texas, the San Antonio area. Due to the coronavirus, though, most of our efforts have been up here in the Washington, D.C. area. We've stayed up here. It's been a little less hot than it has been down in that particular state. Texas, California, Florida, burning up pretty bad. And you know, when I would say to people, you know, this is burning up because of the coronavirus, I didn't mean it metaphorically, talking about the fires, the wildfires. But I don't know. I mean, this goes to prove what I talked about a while back, about projecting out in the universe. And sure enough, now we have wildfires burning. And my understanding is it covers from one side of the U.S. all the way to the other. They are getting smoke traces being picked up here on the East Coast. So between that, the floods, the coronavirus, there's a lot of things going on negative. So let's try to be positive here. Today's recap was what we talked about, why multiple streams of alternate income are a better plan towards retirement. And we covered pretty much how the, Wall Street works. I think we've covered that pretty well. Basically, we kind of proved in no uncertain terms that after the 7th and the 8th happen and occur, the 7th and 8th years of each decade, that a lot of income is lost. And what happens to the income? So many people ask, this is what happens to it. What is a stock? What is an option in the stock market? How the government and savvy investors take money away in a stock downturn. Includes 401k and IRAs. So basically my point here is, if you're looking for the federal government, you're looking for an easy way out, you're looking, well, everybody else does it. Okay, if everyone jumped off of a cliff, and you looked at the end of the cliff, and you looked over and saw the abyss, and you knew that if you jumped down there, you could see the corpses laying at the bottom, float down into the sea, probably you die. So you've got to have that mindset. You can't say, well, I can't go with what the rest of society does. There's pure ignorance in doing so. Being a part of the masses, you need to pull away. Any wealthy people that I've met, not counting myself, they all say the same thing. You have to be an individual. You can't be part of a collective goal. That's why socialism doesn't work well. Everyone's equal, but then they have no motivation to be greater than themselves because they know they'll always be equal. One of the things that we didn't discuss, that we wanted to cover in this recap, is Wall Street is gambling your 401ks. We're getting a little bit more stuff from Robert Kiyosaki. I like his work. And one of the major things that they're playing around with these 401ks to try to supposedly grow them is messing around with these private equity funds and the 401ks. Over the last two decades, public pensions have failed to meet their overly optimistic return promises because they're allocated assets to the highest risk investment ever devised by Wall Street hedge and private equity funds. So basically, you're looking for Wall Street to help you. Stocks are good on a dime. I've told that many times. And some of the stocks that are really solid, and I mentioned before, Apple, Tesla, companies that are really shining, companies that are working as an individual, companies that want to not follow the trend of what the other companies are doing, but trying some things. Apple's been trying a lot of things. They had an event just about a week or so back, talking about some of the new products they're putting out. New innovations. There's nothing wrong with that. Is there risk involved? Of course. Will it pay off? I'm going to bet my money, I'm going to say yes. And I'm a gambling man, but I would say yes. Those are the types of things that you have to watch. Those are the types of things you have to look at. That's the type of mindset that you need. So we all talk about the Federal Reserve, and we look at it as some great entity, and that no matter what happens in the world, it's God, and that therefore it will definitely protect us no matter what. That's the mindset of the Federal Reserve. Federal Reserve, let's go into a little bit of that because we didn't discuss it, even though this is a recap from last week. Another article here at Robert Kiyosaki. Prior to the Federal Reserve and how it was created, banks were very conservative at the time. Those who had money and power had banks, money involved in banks. Some of the central banks had started up shortly thereafter. The money was amongst the few. A lot of people didn't have the bank reserves and the bank savings and deposits that most everyone has today. It just was a different type of environment. The government knew this. So what they did is then they really heavily taxed the rich. They wanted to go ahead and build the country. They knew that the middle class couldn't afford to do it. So what they did is they taxed 90% of their income. I know that sounds insane, but it happened. Michael Moore talks about that. And at 90% of the income, all you do is create a bunch of really angry, wealthy people, okay? So they managed to get away with it. They built the infrastructures that we have now. That's a one-time trick pony that ain't going to work twice. After that point, then these people, dedicated themselves never to allowing this to happen again. They realized that they couldn't squeeze on that. So what they did is then they went to a particular group of people that were part of this at the time called members of Jekyll Island. The Jekyll Island Club owned 1/6 of the world's total wealth. So they said, why don't we go to somebody who really is, has a large amount of wealth and see what we can do with them. Munsey's magazine called them the richest, most exclusive, most inaccessible club in the world. And the 6 men who met there in 1910 and devised a plan that would forever shake the economic foundation of the world, a secret campaign. And if you think I'm just making this up, just a few years ago, the current elites gathered together to celebrate what they accomplished thanks to this creation. So, in the background of the background, the ancestors and the people that came from these people, from these guys, these 6 people here, hope you can see them. Okay, so they were real. This group is holding a conference on Jekyll Island to celebrate 100 years of dominating America. So basically what they did, they pat themselves on the back, but they helped to create the central banks that we know now. And the central banks became what we call the Federal Reserve. Okay, and basically they were approached, Of course, they didn't want to be, taken like so many other of their rich comrades were. And so what they did is a secret campaign to steal from the middle class and give it to the wealthy. And now this dramatic and unprecedented decision on March 23rd, 2020, which about to watch the final transfer from the middle class to the wealthy, a final blow that will divide America into the haves and have-nots once and for all. This is one that will put a nail in the middle class coffin. So every American citizen must decide now which side they want to be on. So basically what that means, the Federal Reserve is just our central bank, okay? They hold different assets. One of the major assets that they hold is this very well-known asset. They don't like talking about this asset, but this asset is basically the backbone. Now in 1971, that particular asset was no longer considered by Richard Nixon to be the standard on which to back currency. But secretly, to this day, if you're looking at gold, and gold sold, I know it's hard to believe, but gold sold like as low as $20 an ounce way back in the earlier years. Now it can be anywhere between $10,000 or higher an ounce for gold. Obviously, they were backing it. A lot of these different countries, and China has been, getting it as well. They've been hoarding it. We do have gold in the central reserves of Fort Knox, and there are a few other places as well as over in New York. In all these places, they don't want to talk about it, but gold is definitely the backbone. still of currency today. It's hard to believe. They don't talk about it. You know, you think that currency is the backbone of currency, but currency can't be the backbone of currency. It's not possible. If you continue to print more money to be the backbone for the existing money that's in society, that's circulating, then you just devalue the money. That's all that happens. It's really, really simple. When you devalue money, it becomes and goes to zero. At some point, the money crashes, and what happens is you get these market crashes, and we discussed that in the prior video. And you get these market crashes, then all they do is they sit down and say, okay, oh, we had a market crash, what do you want to do? Even back when they looked back at it, 1929 with the Great Depression, it was just inability of different companies and capitalistic, in that capitalistic realm of wanting to reinvest and get the market going again. There was a lot of indecision. And indecision can create a long sustaining market of depression. So my point to all this is basically the Federal Reserve is not God. It's not going to protect us. Okay? You can't keep printing money, more and more and more money. The cool thing that we had going on before Trump decided to stick his nose in with China and redo on his own thoughts. Maybe he just didn't like the arrangement because it wasn't profiting him personally and his family, but that they were basically holding us up by the bootstraps. Okay? There's been arguments, and even in this book that I showed you here by James Rickard, which is The New Case for Gold, even in that book, they believe there's more gold out there than is being accredited for. But is there enough gold to cover all the money in the world? He would say he believes that it could be mined to that point. I would say, I don't think so. I don't think there's enough gold in the world. What they're doing is then gold just becomes more scarce and gold becomes more expensive. But the bottom line is, I don't think that gold alone can support the Federal Reserve and the printing of endless amounts of money. It helps to build maybe up the scarcity and make gold more valuable, but I don't believe that the concept of it works, where you could assume that gold by itself can help be the backbone. It is somewhat, but it's in the background, but I don't believe there could be enough gold to cover all the debt that we have. Most people don't realize we're sitting at $168 trillion worth of debt, and that's a whole lot of debt. That covers Social Security and Medicare, which are the unfunded obligations talked about in Anthony Davis's video about the 10 myths about government debt. And the bottom line is, China was backing us. They were backing us. They were putting up anywhere between, I have an argument here from this one group called Wealth Unlocked. And of course, they don't like the things that China do, and a lot of countries don't because of the way that they handle their people. But they said it was like 1.4 trillion is being put into the U.S. Treasury to prop it up. I think it was a lot higher than that. I think they just don't want to admit it. I think there wasn't a whole lot of other countries propping up our currency. Most of the countries they had their own issues with their own currency. The euro was failing. It's gotten and dropped a lot. We won't even discuss after Brexit what happened to the British sterling pound. It's just nothing of what it used to be. When I would travel over there, it was at $1.60. If it's $1.28, I'm surprised. It's just the way that things are. People have their own problems in their own countries with their own currency. But the China was there for us. No matter what upside down trade agreement that Trump felt that was bad, the bottom line was they were there for us. And they were covering us by helping us cover our service debt. Again, talked about in Anthony Davis's video on YouTube, which I highly recommend. Again, you watch. But my point of all this is we have to understand that the Federal Reserve can't print us to safety. We have to look at options so that when the market does a major correction, when the currencies crash, when the currencies drop in value, when inflation or deflation comes in either route, you've got to have a bunch of options here. And I discussed all those options with the alternate incomes: earned income, profit income, interest income, residual income, digital downloads from YouTube, dividend income, rental income. And we'll discuss rental income in the future. I haven't gotten to that yet. Capital gains from investments, royalty income, which is more like for, I talked about earlier, athletes, artists, kind of not out of the normal mainstream of society. One-on-one consulting fees, you could do that on your own. But there's federal payouts, IRA, 401k, you can't trust them. If you're going to trust them, you're not going to make it. So my best advice here on this recap is not to trust them. The Federal Reserve, they'll just keep printing more money, and somehow they'll tell us that it's going to be all right because the dollar is the standard in the world. At some point it may not be. But just printing more money does not solve anything. It creates your savings depletion, because then your savings becomes less. And you need more money in order to have the same sort of income that you had before. That's what inflation will do for you. When you try to hoard money and deflation, that's not going to work either, because banks won't pay you a decent interest rate. And that's where we step in with our company, InStar Alliance. We work with a group of different financial institutions, and from the financial institutions they pay 4.75% on your savings, which is way better than the 0.75% you've been getting from a more traditional bank. We have other investments where clients can get at 6%, and by doing so they can grow their money. But a lot of people don't have money to grow. That's why you need to realize you can't put all your things in one basket. You can't put all your eggs in one basket. You've got to diversify. You've got to have a few other additional, what they call side gigs, in order to make money so that you can continue to invest it properly. I've talked many times, stocks are still growing, they're still booming, they're still going to always be, but they're short term. You can't rely on them. That these markets have volatility, and the 401k and IRA, all backed in through the Federal Reserve, all backed in through these different stock programs, are going to save you. It's not. And in the end, you'll be many, many, many Americans all sitting together with $1,000 maybe in their savings at any given time, and trying to retire on 60 grand or less from their 401ks they have to tap into just to get from A to B, especially from this coronavirus. So take all these thoughts in mind. You need to look at options and alternatives in your life. Again, if you happen to be in the DC area, you're lucky, because we can help you directly. We're an actual business. We can help you. As I've mentioned many times, because of the amount of people that need help, we can't answer all the questions, and thus creating this YouTube channel, and thus creating these different conversations of things that we want you to know about, want you to do as you begin to save money working with us. And from that point, you can make sound financial decisions, and that's all our goal is to do. Get our number 703-646-3941. Next week we'll move further on into other types of investments. We're always discussing investments. Investments is what we are about. But what my point is, next week's investments are going to be discussing real estate, and just deeping further into the power of investing. So, I hope you have a good week. Stay safe. Hopefully, our government will continue to look into contract tracing, because that's the key to us beating this virus. But until then, have a nice week, and we'll follow up with you next Sunday.